When you take a look, oil is still so exposed to these volatile headlines on trade and sort of any confusion we get out of talks. Does that say something about sentiment or actually underlying fundamentals of demand?
It's hard to say for sure, but I think there's both the fear that the demand's not going to be there because there's a lot of buy-in to the notion that Chinese are just playing the president here to the election. And if that proves to be the case, it's hard not to see that affecting demand. Also, the strength of the dollar is really working against oil right now.
So where are the weakest parts
of that argument? There's a powerful self-correcting force that kicks in if WTI drops below 50. You test below 50, pretty soon the rig counts go down even further, and supply is also going to be constrained. And that's the weak part of the argument.
If we hold 50, like if we hold around this area and we sort of just, bounce around, have some volatility, what kind of strain does that wind up putting on Saudi Arabia when they're confronted still with the U.S., but more importantly with demand that no one really seems to have any good visibility on?
It is going to be a problem. Now, there is also the possibility that they've been so bent on an IPO that they've really given us signals about how fast they've come back. I suspect they haven't come back as fast as they talk about withdrawing inventory. They knew they could do that. They did a very creative deal with Iraq to buy oil from Iraq, and then they would put more of theirs on the market. Those kind of things, but they're really leading us to be more complacent than we should be.
I'm glad you said that because I too was a little skeptical that like a week and a half later, all of a sudden everything was perfect. And you have like a journalist troupe come in and look at perfection, like you kind of get a signal of that.
My hunch is that.
A little bit. But you bring up the geopolitical risk, which is that, spare capacity is eroded in Saudi Arabia. They're not going to be the oil supplier of last resort. You have Iraq, which has been having some protests and some issues there. You also have now U.S. maybe stepping back, letting Turkey go into Syria. So there's that issue too. How do you view all of that?
The geopolitical mix is a real challenge. It's going to be a real challenge for us for the next several years. We've got a whole bunch of counteracting forces. We officially are backing Tripoli along with Europe. The Saudis and Egypt and others allied with them are backing General Haftar in Libya. Libya, the failure to deal with Libya during the Arab Spring has given us a mini version of Syria. It's a civil war, it's a real problem, and it's going to continue to be.
So, Sarah, as a market participant, when you see something that has a big dislocation, when you have these geopolitical factors and then you have this macro backdrop, what's your assumption with that?
Well, we were talking earlier about how the fact that the energy sector is a much smaller part of the S&P than it used to be, and how that sector has become, to my way of thinking, somewhat underinvested. And I think that ConocoPhillips raising its dividend is the energy companies are looking for ways to make themselves into more investable companies. The ones who have the cash flow to do it are going to continue to put that dividend out there to make it attractive. They're going to start to look like utilities. But for the rest of them right now, because of the dislocation in terms of demand and pricing, it's difficult to see how investable they are because you're a little bit worried that the timing isn't going to be good. So if I buy it now, do I have to wait for that low prices to cure low prices problem, or do I have to wait for some of those dislocations? And I think right now the sector is just so out of favor. I think there are some attractive places in it, but I think people are, unless you have a longer term horizon, people are too afraid to get into that sector right now.
Do we want energy companies to be like utility companies? Is that a good or a bad thing?
Well, I think the demand of the institutional marketplace is show us you're doing a more disciplined job of allocating capital. That's setting up for, I think, a consolidation. There are more players than are really needed for a competitive interplay, and I think we may well see some form of catalytic effect as consolidation advances.
What does that mean?
I think fewer players and some takeouts. Right now, mergers of equals are the choice du jour, but I think we'll see some consolidations that involve premiums and liquidations.